Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking another look at gold. And since my last video on gold, which I believe was last week, things have got very interesting. All obviously because of the hawkish FOMC. So, I mean, let's look at gold here. I've got it on 1 day candles. So we're looking at it over the last, really like the last year. And you can see under this arrow, we've seen extreme selling towards the end of last week, and we kind of stabilized at the start of this week. And as I've marked up on the chart, it was because of last week's much more hawkish than expected FOMC meeting, which provoked upside in near-term US government bond yields, a lot of strength in the US dollar, and obviously gold didn't like any of that, and just generally speaking, gold does not like it when the FOMC is hawkish. But yeah, in terms of the technicals then, the sell-off last week has made things, in my opinion, much more interesting. As you can see, you got the orange, blue and green lines. That's the 21, 50 and 200 day moving averages. Well, we're below all of them now, so the technical momentum seems to be pointing, well, to the downside, really, isn't it? I mean, let's wait until we see the 21 DMA cross below the 250 DMA and the 50 DMA move way back lower from the 200 DMA. But things are looking much more bearish than they were this time last week, pretty much. And as you can also see, and this is perhaps more important, we've fallen back into that long-term descending trend channel that we were in for most of the last year. Obviously, when we broke to the upside of this trend channel, which I believe happened, at the end of last month or the beginning of last month, that was a bullish signal. But now, obviously, we've broken back below the trend channel. Well, that's a bearish signal. For now, gold is holding up in this area of resistance. If I sort of move in a little bit, you can see this block here marks up a low from February, I believe. Yeah, February. And then some highs in March and April, and then another low in April. So there's decent support in this area, and we have bounced. That's around 1750. But if dollar strength continues, hawkish FOMC vibes continue, well, that level is probably going to go. And it doesn't look too convincing, us holding above it at the moment. But just at the moment, we're consolidating. But if that level does go, well, then we're going to have the push towards this double bottom that was set earlier on in the year in Q1 in the 1680s. So that is the key level. And this, by the way, all of this selling, if we do break below that level and if we go below that double bottom, well, all of this signifies that we're going to continue to move to the south over the medium to long term within this descending trend channel. And then if you go really long term, if we zoom out even more, and we're talking if the FOMC is hawkish for like the next year or 2 years and surprising markets with its hawkishness, then we could get all the way back down to this low, which was set pretty much when there was that panic in March 2020 because of the pandemic, which also kind of went in line with some previous lows, pre-pandemic lows. But that's around 1450. So just bear in mind, if we're looking on the long term, that's another level to look at. But yeah, pretty much, guys, if you want to gauge what's going to happen to gold, you need to watch what's happening to the US dollar. You need to watch what's happening with the FOMC. Those are the two key things I would say. I'd also say keep an eye on bond markets in particular. Keep an eye on real yields. Now, the hawkish FOMC hasn't actually pushed real yields up that much. Look at the 10-year TIPS yield. That's the one that I like to look at. Typically has a negative correlation to gold. But yeah, like I say, hawkish FOMC hasn't actually pushed real yields up that much, which might come to gold's, be gold's savior, really. Like if real yields remain very subdued, well then I think it would be unlikely that we would move all the way back here. For this move to happen, you're probably going to have to see real yields. I mean, the 10-year TIPS yield is about minus 0.8 at the moment. To get all the way down there, 1450 for gold, you're probably going to need to see the 10-year tips move back towards like 0, you know. So yeah, keep an eye on that. But yeah, very interesting for gold going forward. I hope you enjoyed the video, and I'll see you all in the next one.